Hello, Kansas City. My name is Ronald Miller, and I'm with Seniors Making a Difference. The aim of the Seniors Making a Difference is to provide services to the elders in the community so that they can remain in their homes. The way that we do that is we bring in people to provide information to them that will facilitate that. And we have with us today Mr. Dale Irwin, who is famous for helping people out who are disadvantaged and getting them out of jam. So Dale, if there's something you'd like to tell them about yourself, then go at it, and you can start in on giving them the information that they need.
Okay, thank you, Ron. My main focus, I'm an attorney, and my main focus over the last 43 years of my practice has been consumer protection law. And a lot of that has involved suits against finance companies, payday lenders, car dealers, a lot of different industries that can wind up taking advantage of the poor and the elderly. And I have seen since my legal aid days, I saw these rackets where these salesmen, door-to-door salesmen, would go around the neighborhood and try and sell a siding job or some home improvement job and wind up sucking all the equity out of a house by getting a mortgage on it and leaving people with houses that had been paid for. They would lose them after the work would fall apart and they would quit paying. And so I've watched people actually lose their homes because of predatory lending. And it has only gotten worse since I started out in legal aid in the 1970s. And one of the worst areas right now is in what everybody hears is called predatory lending. And if you don't know what predatory lending is, I'll give you one example of a case out of St. Louis. It was involved a woman who borrowed $80 from a loan company, an installment lender, and wound up not being able to pay it back. And by the time they sued her, they got a $2,000 judgment against her. After that, they took $5,000 out of her paychecks, and even after that, her balance on that loan, on that $80 loan, was $19,000. That is predatory lending. And you might think, well, why, how can something like that be legal? How can it be allowed in this day and age? I mean, doesn't it go back to biblical times that usury was against the law and a sin and immoral? And the answer is that we're not in those times anymore. The Missouri legislature has made it perfectly legal for somebody to borrow $80 and then wind up owing $19,000. And that is because of lobbyist money, and that is because the people that we elect and send to that legislature are not interested in ordinary working people. They're interested in the businesses that profit off of those people. One of my favorite quotes is one from James Baldwin, and James Baldwin once said something to the effect of, "It is expensive to be poor." And what Mr. Baldwin was talking about is that if you are poor, you are paying higher interest rates on loans. Because of where you live, you are paying more for your car insurance. And because of where you live, you're paying more for rent and any other services, groceries. And so, you know, this economy is set up to bleed poor people. That's what it amounts to. And when you hear about the trickle-down theory, you know, this idea that the Republicans have where you put a bunch of money up to the top 1%, it'll trickle down to all the people at the bottom. Well, that's a bunch of crap, because what they're really trying to do is the trickle-up theory. They're trying to take a vacuum cleaner to your pockets and your savings and suck it up to the top. So predatory lending is a part of that. You know, these are big corporations that make billions of dollars a year off of the poor. And payday lending and installment lending, those types of operations are the worst actors. There's also, people can also get in trouble in other areas of credit. One area is buying cars. I've seen studies that confirm that the people that pay the most for cars in this country are single black working mothers. And there's a good reason for that. It is because of ignorance. And And I always want to make a difference. There's a big distinction between stupidity and ignorance. Ignorance is simply not knowing something and not having been exposed to it and not having been educated about it. A lot of these companies thrive on people not knowing, having ignorance, and so one of the ways that plays out in a car transaction is the minute you walk into a car dealership, the first question you're going to get out of the salesman that comes out on the lot is, how much do you want your monthly payment to be? And the minute you answer that question, you're setting yourself up to be taken to the cleaners. The car industry calls people that say what they want their monthly payment to be, they call them payment buyers. Or in the back room of the dealership, they call them low-flying ducks. And that's what it is. They know that you're going to try and lowball them, and so they know that when you mention a number, that you'll walk out of that door later that day, because they'll keep you there all day to wear you down. They know that you'll walk out of that door later that day with a payment $50 above what you said you wanted. And they also know that if they can get that close to the payment you mentioned, they can stretch the term of the loan way out. They can make while it ought to be a 3-year loan, they'll stretch it out to 72 months, 5-6 years. You'll still have that same monthly payment, but you'll never get that car paid off before it falls apart. So there's a way you can get screwed on car deals. Another way is on gap insurance. Gap insurance is this. If you buy a car and it's wrecked and totaled, and you owe more to the loan company than what the car is worth, you've got a gap. You've got a gap between what you owe on the car and what it's worth, what your insurance is going to pay for it. And so they sell you insurance to cover that gap. Well, what that means is when you buy that kind of insurance, it's as if the car dealer is sitting there saying, Mrs. Smith, we have just sold you a car for twice what it's actually worth, so we've screwed you there. We've also packed into your contract extended warranties, paint protection, window etching, theft protection, all this garbage that makes the balance even higher. And so when you drive this car off the lot, it is never going to be worth what you owe on it. So to protect yourself from the fact that we just cheated you horribly, you need to buy this other insurance from us that we will make a 40% commission off of, and it'll put you further underwater. So that's gap insurance. If they try and sell you an extended warranty on a new car, most people think that when you buy an extended warranty, it picks up where the manufacturer's 3-year warranty leaves off. It's absolutely not true. That extended warranty, if say it's 5 years, it starts running the minute you drive that car off the lot. So in other words, you've got a warranty from the manufacturer for 3 years, that extended warranty is running at the same time, you've got double coverage, and you're just throwing your money away. But they'll never tell you that. That's my spiel on cars. Another area that Ron wanted me to talk about a bit was debt collection. And I think the main piece of advice I have on this, and the most rampant kind of bad debt collection practices are perpetrated by these companies that buy old credit card debt from the banks, and then they buy it for pennies on the dollar. 4 cents on the dollar is what they get these things for. And when they buy them, they don't get any paperwork. They don't get the actual contract the person signed to get the credit card. All they get is a spreadsheet that shows a balance and the person's name and that. And when the banks sell these things, they say, we don't know what this stuff is. We're not vouching for the validity of these debts. It could be an identity theft that caused them. It could be all sorts of stuff. But here, buy them, go out and start suing these people on them. And so as a result, a lot of people get sued by these debt buyers, and their companies like Portfolio, Midland Credit, or a couple of the bigger ones, Sherman Acquisitions, and when they sue people, they don't have the proof that it takes to actually get a court judgment against them. The problem is most people, because they're only being sued for about $1,200 or so, don't think they can afford to get a lawyer to defend that case, and so they just let it go. They just let the court go ahead and enter a judgment against them. And so then they get their wages garnished, or their bank accounts garnished, and they're financially they're much worse off. The big problem in all of this is that when people sign contracts to like get a credit card or to buy a car or to buy a house or to get a cell phone or to do any kind of consumer purchase, those contracts more and more, almost all, have what are called arbitration clauses in them. And what an arbitration clause is, in short order, is a clause that says we can screw you as badly as we want to and you can't sue us. All these companies that make a living cheating consumers now can cheat consumers, and they've already got a get out of jail free card built right into the contract, and it's hard to do anything about it. Solutions. If there is currently right now going on a fight in the U.S. Congress. The Consumer Financial Protection Bureau, which was set up in response to the big bank failures that created the last recession, they have issued a rule that says that you can't have arbitration clauses in consumer contracts anymore. And right now Congress is trying as hard as it can to overturn that rule. And so if you have any interest in protecting your own financial well-being, the thing to do right now is start contacting whoever your Congress people are and to start making a fuss about what they're trying to do to keep arbitration clauses in contracts. I know it's not a very sexy topic to talk about arbitration clauses, but the fact of it is that if you look at them as handcuffs, it's kind of like some bully comes up to you and starts beating on you and has an arm longer than yours and puts it on your forehead and you can't reach them. You know, they're beyond your reach. That's what an arbitration clause is. It keeps you from fighting back. And so do whatever you can to fight those types of things. Do whatever you can to try and engage in politics at the local level and get state representatives that are not going to go along with the Missouri legislature as it's now constituted, to keep their foot on the throats of the poor.
Well, Dale, that was great. As usual, nobody does it better. And as a senior person here, I'm going to add something that you used to hear a lot of when I was a kid. That's a long ways. But if it sounds too good to be true, it damn sure is. That's one of the things that you're going to find out. The other thing, I'd like to throw something else in there, particularly about those cars that you spoke of. If you see these things in the window that says, caveat emptor, get off the damn lot. Because this is Latin for buyer beware. All of the other information was in English. Suddenly when they tell you they're fixing to screw you, they throw Latin, a dead language at you. That's all I got to say personally, but remember Kansas City, seniors can and will make a difference.
Funding for this program is made possible by the following sponsors and partners: